Let's bring in senior market correspondent Kevin Green, looking at some of the levels here on Wall Street. Let's check it out. What are your thoughts this morning? Good morning, Kevin.
Good morning, Nicole. Yeah, we continue to see some weakness from the overnight session here. We also had the VIX expiration happening this morning as well, so that probably put a little bit of pressure and a little bit of volatility in the markets. And once again, when we're kind of looking at the intraday levels, where are we coming back to? The 5905, 5900-ish level. That's where we are at right now. That's also coinciding with the 200-period moving average on the 15-minute chart here. So we want to be able to try to recover. We did see some weakness yesterday. When you're looking at the volume, it wasn't really too aggressive to the upside or downside, so still fairly light volume here. But once again, on the intraday basis, what we're really trying to look for is a recovery of this 5,900 level as an area of support, having some buyers really try to step in. Now, we do have actually a wider range to the upside at 5,975, so we have a pretty wide gap. 75 points is significant, and with the volume that we've had, maybe we do actually see, once again, a little bit more of a consolidated move. So I'm not sure if we're going to be able to get all the way up to that 5,975, but it's on the radar. And any type of further breakdown, 58.75 to the downside, kind of that line in the sand that we do see a little bit more of a breakdown in the market here. Unfortunately, if you kind of look at the 4-hour chart, we are actually testing the upper trend line from the April lows, and we're testing that right now. So we really don't want to break that that trend line in general, because that could actually create a shift in sentiment where selling activity does kind of take place here. But overall, you're not really seeing any type of strength in any sector at this point in time. Communication services may be trying to recover here. It looks like it's about to go flat, but we are not seeing this kind of shift between defensive sectors and really risk on type of sectors. It seems like the market's really kind of selling everything right now. But once again, VIX expiration can also create some of that volatility, and the lack of economic data kind of puts us in a little bit of a holding pattern for now, allows us to really kind of digest what we've had over the last couple of weeks here. But if we do see any type of further breakdown to the downside, looking at 57.90 as your first area of potential support, that also kind of aligns with that 200-period moving average in purple on this chart.
Yeah, understood. You know, we're watching oil, which has been creeping higher. We also have the constant story of the tensions in the Middle East, and now there's reports that Israel may have its eye on Iran's nuclear stations. And, you know, while that hasn't really come out too much, or there hasn't been more to that, it was enough to be talked about on Wall Street today. We haven't received many confirmations of that report. However, it's pushing crude, right?
It is, and initially when the market opened yesterday evening for the futures, we did see crude push above that $64 level, but it has faded ever since because we have not had any type of follow-up confirmation from the Israeli government, as well as the U.S. government, or any other news outlets that have really confirmed the story here. So I think the market, when you're looking at the energy patch, is really kind of holding back a little bit when it comes to this geopolitical risk. And the real risk is going to be supply chains and also refiners being hit. Now, for Iran, they export around 3 million barrels per day, give or take, depending on the source that you track here. But that could actually have a disruption when it comes to China flows. And so that's something that also we have to be mindful of. That Middle East conflict is not isolated. It will have some ramifications. And obviously, we're trying to make a deal with China. So that would probably put a little bit of a speed bump if we did see this action kind of going through. But overall, we continue to reject that 50-period moving average on the daily chart for crude. That's the next area of resistance that we really got to get above, and you really want to try to get above $65 if you are a bull right now. But this consolidation is something that a lot of bulls for crude in general actually does appreciate, knowing the fact that we are going into driving season and we are seeing refining rates for the most part leveling off, which should also tighten supply here. So let's see how this actually resolves today. On the inflationary front, though, Nicole, we have seen crude up around 7%, 7.5% from those lows. Gasoline is only around 6% away from the highs, 6.5% away from the highs year to date. So there probably will be some inflationary pressures from the energy sector being reflected in CPI or PPI if this trend does continue, which is also not really good when you're looking at the administration's policies and what they want to be able to accomplish, as well as the Fed trying to get a reason or have a reason to be able to cut rates. So this one is definitely on the watch list, at least for today, to see how this actually resolves itself.
Yeah, understood. I'm seeing 10-year bond yields above 4.5%. I woke up, quickly checked the 30-year above 5%, right back to those levels of late 2023. Some concerns there, and then this auction today, very important. We got to make sure people want to buy U.S. bonds, right?
Yeah, we'll keep this one on focus. We have to be mindful. The 20-year Treasury auction is not a popular auction just in general. So everybody will be focusing on it, but I wouldn't hang our hats on it completely, just given the fact that it's not really a popular maturity. In fact, you have some previous Treasury secretaries that even kind of threw out the idea of maybe reducing or even eliminating that offering just in general because of the lack of popularity. But when you're looking at the 10-year, the level to really focus on is 4.55%. We continue to try to test that and reject. Seems like once we get to that level, we do have some buyers really stepping into the yield complex here, but we do have this inverse head and shoulders pattern taking place and it's still intact for right now. So that neckline is going to be key. Could the 20-year auction actually move the needle here and move this to the upside? If it does not look really great, that could be the case here. But once again, it might be a headline mover for today, but the 20-year, we have to discount it a little bit. The offering size is fairly light and the demand is also fairly light just in general compared to the 10-year or even the 5-year Treasury auctions.
Yep, understood. Good to see you. Kevin Green, thanks for the breakdown here as we open and we see the S&P at 59.06, the Dow's down more than 0.75%, the NASDAQ down 0.5%. Kevin, thank you.